The Coindesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
It's tax season, time to turn to the tax experts for accounting tips when it comes down to your crypto. Joining us now to discuss is Pierre accounting owner Eric Pierre. Welcome, Eric.
Thank you for having me this morning.
Great to have you here. All right. Tax season really frustrating for many people. People may earn and spend crypto like a currency, but the IRS may have other ideas. If you're accepting crypto for income, how is that treated? I mean, are you declaring crypto for income? And, if you do spend it, is it treated like a capital gain and you're effectively taxed twice?
That's a great question. So, obviously, I've seen you all talk a lot about NFT. So NFT and then the other crypto treat a little differently, but NFT being the non-fungible, and we're seeing it used to do art, which now even people like Tom Brady are getting into it. If you have, let's say, NFT and you create artwork and then you sell it, you're going to be taxed at ordinary gain. But when you create the artwork, what's nice is that the IRS is going to allow you to deduct the expenses that you incurred to create that. Versus, let's say, I'll do a traditional buy where if you do buy and hold, the IRS doesn't tax you when you buy it just like a stock, but then when you sell it, your tax is going to depend on your holding period. So if I bought Ethereum today for, let's say, $2,200, and then I sell it 6 months from now for $4,400, I'm going to have an ordinary gain of $2,200. Now, if I buy that same coin today and then I wait a year plus 1 day, now I have long-term capital gain. Now, the one thing that is unique that the IRS is looking to do is that if you're dealing in NFT, that they may treat that particular coin as a collectible. What happens is that if you're a high-income earner, the long-term gain will be higher than the traditional 20%, and which they could get you up to 28%. And a high earner would be somebody that's single, making $441,500 and above, and then married $496,000. So the IRS is starting to get a little tricky to find ways to take more money out of your pocket dealing in this space.
Eric,
about
NFT.
If you're earning, go ahead, Lawrence.
Well, I was going to ask, when you're talking about the expenses of making an NFT, what can you put in there? I mean, obviously, it's if you're pointing and clicking, do you actually incur many expenses, or can you start to throw in the expense of owning the computer? I mean, how much can you really put in to deduct from the income of that? Really, we know how this works in other industries. So how do you do that with an NFT?
Well, you're going to have to be very clear on the cost of incurring, because if you bought a computer to create NFT and you can prove that you used that to create it, then you should be able to deduct it. No different than me buying a computer to use it to do tax returns. But obviously, this space, since it's not traditional, it's a lot more controversial.
Just a follow up. So I'm earning in crypto, stable coins, Ether, Bitcoin, what have you. Am I declaring that as income? And do I also have to declare it as a capital gain later on?
Okay, so when you say you're earning, are you talking about because it's one thing to earn if you buy and hold like a stock. If it appreciates and you buy
earning as in, I'm working and for my services, I'm receiving Bitcoin. I mean,
yes,
that's
you have
what's
to declare it as
happening.
income. Yeah, you have to declare that as income. Absolutely.
And later on, it's also a capital gain. You're essentially taxed twice. That doesn't make any sense.
No, if you're being paid for so if you're being paid for your services, then the crypto that you got paid, you only get taxed once. You would declare the value at the time you receive it. So if you pay me Ethereum today for my appearance, whatever the value is of Ethereum today, that's what I report. I'm not going to be then hit with a capital gain. You just paid me that currency instead of a US dollar.
What's the most common mistake or misunderstanding that you see about crypto taxes?
The biggest one that I know of is that on your 1040, you're supposed to answer whether you have it or not. And if you don't answer it, you might be inviting yourself to problems. And then the other thing is that a lot of people do trade it. And if you're trading one coin to another, that's actually a taxable event. And people are not reporting that. And the IRS is starting to get more sophisticated and tracking that, as one of your previous guests mentioned. They're getting more and more information. They're starting to figure it out. And more companies are starting to issue the 1099-Bs, just like the companies that you trade stock in.
Now, one question from a tax point of view, from an accountant's point of view, is it a good idea to buy those Teslas and real estate and what have you using Bitcoin? I mean, there are all these, the other day we had somebody who's selling real estate for Bitcoin. Tesla made that big announcement. Elon Musk said, yeah, sure, buy our Teslas with Bitcoin. We'll accept it. But is it really a good idea from a tax point of view? What happens there?
Well, it's going to depend on your holding period. If you've been holding it for a while, then you convert it to purchase stuff. So everybody's situation is different. Some people may have had it for 5 years. Some people have had it for one day. But yeah, it does get more complex. But, everybody's situation is different. There's no one size fit all. So I can't give a broad answer on that.
All right. Thank you so much for joining us, Eric. Appreciate your time.
Thank you for having me.